Hi, my name is Dan Ozaki with First Financial Securities, and today what I'm going to be doing is I'm going to be doing a book review on Douglas Andrews' book called Misfortune 101. I've been reading a lot of blogs online, and it's a very controversial book, and I wanted to talk a little bit about this book today. This actually is the cornerstone of what our company is about, First Financial Securities. We have no affiliation to Douglas Andrews, but the principles that he talks about and the Index Universal Life product that he talks about in this book, we feel is the next wave of retirement planning and life insurance, and we feel it's going to be the next big thing on the market. So let's talk a little bit about Misfortune 101. Misfortune 101 talks about an Index Universal Life, and they use it as a retirement fund and a life insurance policy, and they compare this Index Universal Life to some other alternative financial investments that a lot of you guys are investing in today. So if you actually read through the book, they're going to talk about the reasons why you want to use an IUL. Today what I'm going to go talk about is on page 226. Douglas Andrews actually takes an Index Universal Life policy and he compares it to various financial alternatives. So he takes a 30-year-old male, $500 a month, and he invests the money in a municipal bond fund that yields 5% return, in an annuity that yields 6.25%, an IRA or 401k that yields 7.75%, and a mutual fund that earns 10% interest. He takes that 30-year-old male and he invests the money all the way to age 65, and then at age 66, he starts to withdraw $64,000 from the account. And he shows you where the money starts to run out. So if you take a look at the book, in the municipal bond fund that's yielding a 5% return, by age 73, the client runs out of money. Okay? The annuity that's earning 6.25%, same year, age 73, the gentleman's going to run out of money. If you look at the IRA or the 401k at age 79, they run out of money in the account. And the municipal bond or the mutual fund that was yielding 10% at age 80 runs out of money. And if you look at the Index Universal Life policy, if you look at age 100, the client still has a positive cash flow in his account. So how is it that all these other types of alternative investments run out of money way before the person dies or in the retirement years, and the IUL lasts way past 100 years old? I'm going to explain that today and tell you the reasons why the IUL, we feel, is one of the best investment retirement plans available on the market today. In every single one of these alternative investments, what happens is you can't earn triple compound interest. And triple compound interest just means that you're earning interest on the principal amount that you're investing, you're earning interest on the interest that it earns, and you're also earning interest on the taxes that you would have paid at the end of every single year. And that's called triple compound interest, and an Index Universal Life policy takes advantage of triple compound interest. Let me give you an example. Let's just say by the time you hit retirement age, you got a 401k plan, and the 401k plan has $1 million in it. Okay? If you withdraw $100,000 a year from that $1 million 401k plan, what happens is you deplete the principal amount by $100,000. So you have $1 million, you withdraw $100,000, the next year you have $900,000, the next year $800,000, $700,000, so on and so forth, till the account runs out of money. According to the rule of 72, which I'm not going to get into today, but if you divide 72 by the interest rate, it calculates the number of years it takes you to double your money. If you're earning an 8% return, your money will double every 9 years. So if you got $1 million and you withdraw $100,000 a year, by the time you get to year 9, you'll have about $100,000 left in the account. If it doubles one time to $200,000, in 2 years you run out of money. Now I understand that it's not totally accurate, but I'm just showing you for the sake of this example so you can understand. It's going to last a little bit longer than that. I understand that because of the depleting principal and the interest that it's earning, but this is just to show you the concept of how this works. So in this scenario, the person will run out of money in approximately 10 or 11 years. If you take in consideration interest, maybe 13 or 15 years. Now, if you look at the Index Universal Life policy, in the contract, the life insurance policy, it states that you can take a personal loan against the money. So how does that help a client out? Well, if you got $1 million in your life insurance policy, and you take a personal loan for $100,000 against that money, and it's in your policy that the insurance company will lend you the money, no credit check, nothing, then the principal amount of that cash value doesn't get depleted, so it's still earning triple compound interest. So if it's averaging 8% return, which the IUL has been returning over the last 23 years, in 9 years, that $1 million will turn into $2 million. 9 years later, the $2 million turns into $4 million. 9 years later, the $4 million turns into $8 million, and then you die. The difference is, if you borrowed $100,000 for 40 years, you owe them about $4 million. Let's just add interest to that, $500,000. So when you die at age 100, if you have $8 million in your life insurance account, and you owe the insurance company $4.5 million, they're going to take the $8 million in your life insurance account, they're going to pay back the loans of $4.5 million, and whatever's left over, the $3.5 million, will be transferred to your children. Probate free, estate free, capital gains tax free, because it's a life insurance policy. So we use this fund also to transfer wealth to children or beneficiaries, but it works as an awesome retirement plan, and it outlasts any of the traditional type of investments because of the fact that it doesn't deplete the principal, and the principal amount of money keeps compounding every 9 years. And this is basically the cornerstone. This book is the cornerstone of what our company, First Financial Securities, is trying to educate and launch out to the general public, that the Index Universal Life Plan is going to outlast your 401k. You're not going to have to pay income tax on the money, and it also comes with a life insurance policy that has so many other benefits. So if you are interested in getting more information, take a look at our website, and it's going to be on the bottom of this video, or you can give us a call for a free 15-minute consultation, and we'll discuss your retirement plan in detail and give you information on that. I appreciate your time with us today. Happy holidays. Again, my name is Dan Ozaki with First Financial Securities.